All right, this is Market Pulse. Let's pick up the pulse of the day with David Olujinmi. Thank you for joining me, David.
Yeah, thank you so much, Joanna, for receiving me.
Yes, so let's get into it. FGN bonds, we know they were offered yesterday 190 billion on its reopened 9-year, bond. Notably, the lowest auction this year compared to the 300 compared to the 300 billion that was offered last month. And we saw investors rush and dig into it. Any insight as to what perhaps spurred investors' strong interest in the bond, and also why it's the lowest this time around? Why it's so low?
So, one of the reasons why it's so low is because we're obviously seeing the federal government obviously issuing another bond, its first series of a domestic dollar bond. That's the $500 million bond, which they just released the circular about yesterday. So it's obvious, it's just arithmetic that the government is trying to get investors more tilted towards the 9.7% yield rate on the $500 million bond than on their normal government bond. Though they need money, but I think they're trying to place their priorities in place. And right now, the dollar bond has the highest priority. And for investor returns, one of the things we can see is that the equities market is not offering so much for them right now. The equities market is not giving all of that return. H2 2024 has been, I don't want to say terrible, but has been quite a ride for market investors. We've seen the market go down from 100. Yes, now we're about 95,000. That's about 5%. That's almost 5% decline in the NGX this half of the year. After seeing such a tremendous performance in the first half, then investors are looking for where's the best option, where's the nearest option. Because we've been seeing a lot of sentiment around banking stocks. A lot of public commentators have come out to talk about why banking. And I think the bank should try and do something to help their imagery as they try to raise more funds. So now we've been seeing investors trying to tilt towards government securities. At least government securities offer you returns. It's like the surest means of getting returns. That's one thing that would always be about government bonds, whether it's the treasury bills or the 5-year, 9-year, 10-year FGN bonds. So that's one thing. Investors are trying to, especially the pension fund administrators, the PFAs are trying to get their money in a place where they know that at least will have return.
Yeah, and I believe the fixed income market is looking a little more attractive this time around. But you've talked about the performance of the NGX equities market at this point, and how, I mean, compared to H1, where we emerged the best performing in Africa, that doesn't seem quite likely. Well, anything can happen. But what are your projections for the equities market? Do you see any particular event that could spur activity in that market and, ignite, the appetite of investors?
So basically, when we see banking stocks come, the capital raises by banks, when we see it reflect in the market, we see all those capital raises reflect on the market, we're obviously going to see an increase in the market. At least we'll see market cap increase, and we'll see ASI also increase alongside. So I feel like that's the number one thing that we can say we should really watch out for. Now we've seen Fidelity, we've seen GT close. I think by in the next 2 weeks we'll see FCMB and we'll see Access. No, sorry, this Friday we'll see Access close 23rd. Next 2 weeks we'll see FCMB and we'll see Zenith also close on September 9th. So some of this capital, some of these issued shares, when they begin to reflect in the market, and we see maybe we see GTCOs, see their market cap probably hike up to $2 trillion Naira rather. At least I believe that this is something that would trigger interest in that market.
So we're waiting for the right issues and public offers to reflect. Focusing on the banking stocks and their performance, we know that yes, in spite of the impressive earning results that they've posted, they're not doing so well on the equities market. Let us a bit into that.
So one thing is that the banking stocks, they don't offer. One thing I would say about banking stocks is that they don't really do so much for their shareholders, as much as we like to say they do so much. So I'll use 2023 as an example. We had some of the best performing. We had some of the banks were like the highest earning in the country. We saw Zenith with about 676 billion Naira in profit after tax. Net income And how much did they pay as dividends? The bank paid about 125 billion naira as dividend, less than 20% of their net income. We see the same thing in Access, we see the same thing in UBA, First Bank. GTCO was the highest paying bank in terms of net dividends, and GTCO paid about, I think they had a dividend payout ratio of about 18%. So these banks are not really giving so much. Somebody made a comment on Twitter yesterday. He said he bought 2,000 units of Fidelity Bank in 2004. From 2004 till date, he has never made 1,000 naira on dividends on any share. That's a lot.
Yeah,
that's a lot. So people are not so enthusiastic about banking stocks right now. Another thing is that they are in a capital raising period where most of any capital that is going to probably want to be coming into the market to say, oh, let's put it into some banking stocks based on their earnings result of last year. Well, like, okay, let's just try and put it into their capital raises. So we've not been seeing, in fact, this year, banking stocks have declined. I think they've done about 5% decline already, like from the start of the year till date.
Right.
So another thing one thing banks can do is I think they should try and improve on their returns to their shareholders. They should do better. They should do better and try to give shareholders better return, more dividends.
Yeah, I mean, no one says no to a dividend-paying stock, right?
Yeah.
But let's come to the currency market, right? Currency market, now we're having BDC operators, attribute the persistent weakening, even though we saw some gains today, but that was largely due to a weaker dollar. But BDCs are saying the persistent weakening of the Naira is due to a lack of consistency in dollar allocation to BDC operators by the CBN. Would you consider that a fair diagnosis there, or what's your view on this matter?
So BDCs, one thing with BDCs is that BDCs would always complain about when they are not getting what they want, when they don't have their way. It's a consistent thing. But one thing I must also say is that BDCs are also a very important part of the exchange rate ecosystem in Nigeria, because they are like the retailers of foreign currency in this country, basically. It's not so easy to walk into a bank. Maybe now it's become easier than it was last year. But it's not so easy to just walk into a bank and say, I want to buy this. There's a lot of processes. There's a lot of processes to pass through before you can go and just say, okay, you want to acquire dollars for this purpose or this purpose. BDCs still remain like some of the easiest options. And the reason why we see this falling, the reason why we see this decline, like they rightly said, is because they've not been getting the dollars as often as they would like to. If we start seeing dollar get into BDCs as often as they would like to, then we'll basically just say we have reverted back to the Charles Soludo time as CBN governors, when dollar was basically sold to BDCs every week. It was like a weekly thing. And that what happened then was that the disparity between the official and the parallel exchange rate was so little. It's almost the same thing what we're seeing right now. But I think one thing is that the liquidity in the system is still not as much. There's still no dollar liquidity or FX liquidity as much as we would like.
I mean, we'll see how the latest efforts from the DMO and the federal government with the bonds and all of that pushes liquidity in the FX market. But thank you so much, David Olujinmi, for joining me to pick up the pulse of the day. Always a pleasure.